Incoming intel. Listen up, apes. You see the charts, you see the depths, and they want you to think it's just the market. But it's not. There's a war being fought in the milliseconds between trades, a war waged by ghosts, algorithms, and a shadow market designed to bleed us dry. Well, today, we're pulling back the curtain and exposing their entire psychological operation.
Here's the battle plan. First, we're going to look at the day their machine glitched out and showed the world its ugly face, the flash crash of 2010. Then, we'll decode their main weapon, high-frequency trading. After that, we dive deep into their biggest crime, the counterfeiting scheme known as naked shorting. We'll see the pathetic attempts by regulators to stop them, and then we'll talk about why we are the only things standing in their way.
All right, let's rewind to a day the hedgies would rather you forget. Picture it, a totally normal afternoon, then bam, the entire market just evaporated. This wasn't a crash, this was a hostile takeover by algorithms, and it gave us our first real glimpse at the terrifying monster they've built.
$1 trillion. Just gone. In minutes. But then it came screaming back. That's not human emotion. That's not a correction. That was a glitch in their matrix, a system failure so massive it exposed their entire game. The hunt for answers led straight to the supercomputers and the high-speed algos they use to control everything.
Just look at this timeline. At 2:40 p.m. the plunge starts. 20 minutes later, we're down almost 10%. And then, like magic, it all comes back. This was the machine, completely out of control. It moved faster than any human could ever react, proving that the suits aren't driving the car anymore. Their algorithms are.
And for the little guy, this wasn't just a scary chart. If you had a $500,000 retirement account, you could have lost 25 grand. Why? Because their algos triggered every stop loss out there, forcing regular folks to sell their best stocks at the absolute bottom. It was a mass liquidation event designed to shake out the paper hands. When the market snapped back, your money was already in their pockets.
So where did this chaos come from? Let's talk about their weapon of choice, high-frequency trading, or HFT. This is the dark magic they use, the real ghost in the machine.
So what is HFT? It's trading so fast it's basically a time machine. These firms pay millions to put their computers right next to the stock exchange servers just to shave a nanosecond off their trade time. Their algorithms then fire off millions of trades in the blink of an eye, front-running your orders and scalping profits before you even know what happened.
Here's their playbook, simplified. Their bots scan everything, looking for tiny fractions of a penny in price differences. The second they spot one, they execute millions of orders to steal that tiny profit. And they do this over and over, thousands of times a second. They aren't investing, they're parasites, siphoning money out of the system.
And here's the best part. Their own weapons can blow up in their faces. The flash crash wasn't the only time. In 2012, a firm called Knight Capital let a rogue algorithm loose. For 45 minutes, it caused absolute chaos, losing them over $440 million. It almost wiped them off the map. It was a nightmare for them and proof that they are trapped by the very machines they built to trap us.
Now, this insane speed isn't just for scalping pennies. It enables their ultimate crime, the one they deny to this day, the one that is at the heart of this whole fight. I'm talking about naked short selling.
Now, you need to understand this. A legal short means you borrow a real share, then you sell it. But a naked short, that's when they sell a share they never borrowed, a share that doesn't even exist. They're creating phantom synthetic shares out of thin air to drive down the price of our stocks.
Don't take my word for it. Even guys in the mainstream media, like Matt Taibbi, are calling it exactly what it is, a flat-out counterfeiting scheme. They are printing fake shares to dilute the market and crush companies they want to destroy. It's the biggest secret on Wall Street.
Oh, you'll hear the suits and their media puppets talk about price discovery and market efficiency. That is pure FUD. It's propaganda. They're not discovering prices, they're dictating them. It's a weapon of mass destruction for our portfolios, designed to create panic and make you paper hand your positions.
And then you see garbage like this, a report from some committee full of Wall Street insiders claiming it's all good for the market. Of course they say that. It's their gravy train. It's like asking the Fox to write a report on henhouse security. We see right through it. We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVDA stock on Moomoo. Links are in the description. Smash the like, Subscribe to the tribe. Apes together strong.
So, with all this crime happening in broad daylight, what are the so-called cops on the beat doing about it? Let's look at how regulators have tried and failed to tame these beasts.
One of their big solutions is a kill switch. Sounds tough, right? Wrong. It's just an emergency brake for them. After Knight Capital almost blew itself up, they created these so if one of their rogue algos goes nuts again, it gets shut off before it bankrupts the firm. This isn't to protect you, it's to protect them from their own greed.
They also created rules like Regulation SHO to target naked shorting. It's a joke, a slap on the wrist. All it means is they have to pretend they can locate a share before shorting it. And their idea of transparency is publishing the fails to deliver list, which is just a public record of their crimes that they almost never get punished for.
So what does this all lead to? It leads to the final showdown, this constant tug of war. But it's not a fair fight. It's their high-tech innovation versus a regulatory system that's always 10 years behind.
The story they want you to believe is that this is a race. But it's not. The regulators are walking and the hedge funds are driving rocket ships. They will always be faster, always be looking for the next loophole, the next way to rig the game. They write the code, they own the machines.
So let me ask the real question here. Can the regulators ever keep up? No way. Absolutely not. Now let's be crystal clear about this. This is all educational banter, pure speculation for the apes in the trenches. The market is a casino and none of this is financial advice. But here's the thing. They want you to think it's hopeless. They want you to think the machine is too powerful. But they forgot one thing. We have the numbers. We have the conviction. They have algorithms, but we have diamond hands. So ignore the noise, ignore the FUD, trust the process, hodl. See you on the moon.